welcome on board our experts, Andrew Holland, Kunal Bothra, Naresh Mirani, and then figure out where the market is headed. Kunal, what's the take on the index? Because it's an even narrower session than what we had yesterday.
Well, yeah, narrower session, but the Bank Nifty is underperforming, and I think we are now back again below that 48,000 mark for the Bank Nifty, where we've been protecting this level for at least the last 1 to 2 trading sessions for the index, which means that we could now be drawing back into the previous supports for Bank Nifty, which is around the 47,250 to 47,500 levels. But I think today's day is more to do with the benchmark Nifty consolidating yet again around this 22,500, 600 levels. And the good part is that we are seeing some beaten down sectors making a comeback for themselves. The likes of FMCG, for example, is looking quite strong. You're seeing some recovery or some shades of recovery coming back into the IT stocks, the likes of Tech Mahindra, etc. So I would probably believe that it's a very stock specific kind of a market. Nothing major cues in terms of sectors, which could probably be the next trending sectors going forward.
Okay, point taken, Naresh. But what's your take on Reliance? That's one outlier today. It's up almost 2%, contributing almost 50 points on the upside. And on the other hand, ICICI Bank and SBI are a bit of a drag. What will be the recommendation on these three specific names?
So Reliance Industries is something which I continue to like and have been recommending. And if you look at the charts, it's poised very interestingly at current levels. So in the month of April, it made 4-5 tops around 2950 to 2980. The previous all-time high is around 3024, adjusting it for Geo. So 3000 to 2950 is a stiff resistance. We've come very close to it now at 2920, 30 levels. And today is a day where it is coming back to those levels. And last time we saw a big cut happen in 3 sessions was from this 2950 mark. So if it sustains 2950, it ideally opens up a target price of 3200 to 3400 levels. So that is the possibility going forward. And Reliance being one of the largest weights or in the top 2 weights of the index can propel it. So even today, out of the 40-50 points on the Nifty, majority is being contributed by Reliance Industries. So positive on the stock. On the banking side, we are not seeing follow-up price action. So we've seen ICICI Bank keep coming back to that 1140 mark, goes back to 1100. That's been the tight range. SBI made a new all-time high yesterday, and again has seen a pause today. So the bias is positive. The momentum is yet not great in the banking side. So waiting for further momentum to come up, but the bias remains positive on ICICI SBI.
Right. Andrew, hi, afternoon. You think it's a pre-election event quietness on the markets?
We seem to be in this range, which everyone's been talking about. But interestingly, I've noticed that some of the, you mentioned defense stocks before starting to move, and I noticed with construction companies as well. So I think there's a feeling that, once the elections is through, that what you're going to see is a whole bunch of ordering over the 3 months afterwards, whether it's for defense contracts or construction contracts. And of course, all of these share prices move on the basis that they get new orders. So, that's why I think these sectors are starting to pick up again. And of course, a few weeks ago, there were some worries about the voter turnout. That's kind of less of a problem for the market at the moment. So everyone's kind of concentrating on what after. And of course, you are going to see a lot of construction contracts being given out after the elections.
Point taken. So that's a view on defense and industrials in some of these public sector entities, Andrew. But what do you think will change the market mood regarding private banking names? Because earnings wise, it's not been a very big disappointment as such, but the stocks just fail to move.
Yeah, I think it's a case of FII selling and using the banking sector as a very liquid and large overweight to neutral stance, which they had, to fund some of their moves into China, which we've been seeing over the past month and a half. So I think that the banking sector, given its weightage, just falls under that problem of being used as funds for other markets. So. I agree with you. I don't think there's anything wrong with the results season so far. And if anything, once the bank sector starts to move, there's going to be a lot of short covering and a lot of buying to make up to some of the positions which have been lessened over the last month and a half particularly by foreign investors.
Situation, would you recommend the retail audience out there to perhaps start adding the private banking names? Because as you're saying, when it does move, it might move with quite a bit of ferocity.
Yeah, no, I think the banking sector is the place to be. If you believe the economy's going to continue to grow very strongly, the banking sector would have to perform. Listen, the banking sector started to perform after the results, and then of course you had some regulatory moves, towards Kotak Bank, and then obviously about project financing, which just kind of dampened the sentiment a little bit for banking. But the results season so far is showing me that the NIMS compression is pulled behind us, and that's great news for the profitability of the banks going forward.
Andrew, what is it that you're making of this entire cap goods and energy play? I mean, we saw earnings from both BHEL as well as BEL and quite the polar opposites, but it's a different story that the stock pattern may have been pretty much the same. Do you think it's time to get a little cautious here?
See, at the end of the day, for whether it's infrastructure stocks, renewable energy, it's all about execution. And it's those that can execute those orders profitably, will continue to do well. What tends to happen is that share prices move on the order book being, increased. And I think that will be the benefit. They'll still remain beneficiaries of that. But when you come down to the end of the day, is it falling through to the bottom line? That there's still question marks over that for some of these companies, which is why, when we look at the kind of infra play, we're probably more towards the kind of, the more specialized areas, where Siemens and say ABBs operate, which is smart cities, smart manufacturing, which is better margins, and obviously, better execution as well.
Okay, point taken. But since we're on the subject of BHEL as well as BEL, let's take it across to Junaid to find out what was the brokerage commentary and what the management has to say about that.
Results were on the owing to flat execution and working capital, making the company net debt company. The miss on EBITDA was due to the higher risk, which was not for the support of provision write-backs. For FY 2024, the margins fell around 60 BPS. The management said that this should be bottoming out from now on. And if we talk about the cash flows, analysts say that this reflects the real situation in here. 3,900 crores of negative free cash flow has led the company for a net position of around 2,600 crores. The future of the company's net thermal business looks bleak beyond FY30. The analyst says that the old legacy project shows sign of execution pickup and is expected to perform better by the end of FY 2025. Now moving on to BEL, the company reported the revenue of around, the company is trying to target a revenue growth of around 15% for FY 2025. The management also said that the EBITDA margins for FY 25 will be in the range of around 23 to 25%. The focus for FY 2025 is in improving operating efficiency going ahead. They're expecting the total order book of around 25,000 crores in FY 2025, excluding the QRSAM order book. For export revenues, they are targeting $110 million for FY 2025, with adding another $200 million from export markets. Now, if we talk about the capex and expansion plans, they will be doing around 600 to 700 crores expansion per year. And they are also building a super component facility in Hyderabad, starting up with an investment of around 130 crores.
Received orders of 9.6 gigawatt last year from our power sector division, totaling to around 52,000 crore rupees. All these thermal sets are of 800 megawatt rating. Our industry sector segment also witnessed the highest ever order book inflow of 22,000 crore rupees. With the above, we recorded BHEL's highest ever order book of around 78,000 crore rupees in FY 23-24. If we see the last previous year, it is 70-30 ratio, 65% or 65-70% is from private sector and balance is from industry sector. And our perspective is we want to go for 50-50%, 50% from the power sector, 50% from the industry sector. And from industry sector, as our main areas will be transmission, transportation, defense. These will be the three major areas. As far as capacity addition is concerned, around 10 gigawatt capacity addition we will be doing. And exactly means we cannot say what will be the revenue guidance, but definitely we are targeting some 12 to 15% of CAGR year on year.
Okay, on that note, we're going to take a very quick break. But as we do that, here's a quick programming note. We at ET Now are conducting a mega poll amid the Lok Sabha elections on what the verdict could mean for the markets and how CIOs and market participants are positioning their portfolios. And you can also be a part of this survey. Just log on to our X or Twitter handle, follow ET Now Live and cast your vote on today's question, which is, will the markets peak post-election verdict for the year? Back with closing trades right here in ET Now, and closing trades haven't really moved anywhere. We're still about in that very narrow 100-odd point band. A bit of a pickup, but not really anything meaningful so far, at least. About 65-odd points of an uptick is where we are sitting at for the index. L&T holding out well, ITC ahead of its numbers, looking okay. Unilever is holding out well, but like we were pointing out earlier, the biggest contribution today in trade on the index is definitely coming in from Reliance, which is notching up almost 2% off again. Pharmaceuticals is the one which is not looking bad. Cipla is on a tear, 3% of an uptick there. DRL is looking smart, and that also holding up 1.6% as we speak right now. In fact, Andrew, just wanted to get you in here about, this pharma revival which is currently at play. Many stocks have already moved up, case in point being a DRL or for that matter Cipla. We think there are bound to be, it's bound to be a more sustainable move and will last longer.
Yeah, I think we've kind of hit bottom some months back for the whole sector, and I think the prospects are starting to look better, not just locally but overseas as well. So I think that's been the good news. The results season has not been fantastic, but it's not been a disaster. So I think the narrative coming out of these companies are that things are slowly starting to improve going forward. And of course, if you want a bit of safety, in these markets, given the volatility, then the whole of the kind of pharma and FMCG pack have come into play, right, in terms of just a bit of safety, where some of the earnings have kind of reached towards the bottom, and you can see a bit of light at the end of the tunnel going forward. So I think that's the reason. And obviously, there's been a few QIPs and block trades, which again have got the momentum going for some of these share prices from where they were before.
Point taken. So that's a view on pharma. But since we are on the subject, let me bring on board Shrishti as well to talk to us about what the expectations are. The numbers could be announced anytime over the course of next 1 hour. Shrishti, but tell us, what's the street expecting? Because Taro was a decent set. So more chances of a surprise there?
So we're expecting a decent set from Sun Pharma, because though on a sequential basis we are not expecting a significant jump, but on a YY basis there could be a double-digit growth for Sun Pharma, and all eyes will be on the US sales this time around, because for US we're expecting a growth of 16% on a YY basis, and we are expecting the number close to be $500 million, and the push could once again come from the specialty sales portfolio, and the key to watch will be the contribution from the G-Rev limit as well. But apart from that, in the domestic business we are expecting a growth of 10% on a YY basis, and actually factoring in all of these into the numbers, we are expecting a revenue close to 12,522 crores. The EBITDA is expected at 3,240 crores, while the margins expected at 25.9%. And lastly, onto the profit figure, though on a sequential basis there could be just a flatter sort of a growth, but on a YY basis a 31% jump onto the profit of the company is what we are expecting at 2,602 crores. But apart from the numbers, the key to watch will be the management commentary and the update on remediation of the Halol and the Maholi sites. Other than that, the outlook on their R&D spending as well. So, and how are they seeing the outlook for the specialty sales, not just in US but in the rest of the markets as well. So all of this we will be eyeing on the management commentary, but this time a decent set expected from Sun Pharma. The US sales as well as the margins are key to watch.
Okay, so that's the expectation from Sun Pharma. The other space which is buzzing around is these general insurance companies somehow. So GIC is up 10%, New India Assurance is trading with a 7% gain. Not really sure if there are decent amount of volumes there or if there's anything backing that. But nonetheless, these stocks are active. Kunal, the other pocket which is doing quite well is the FMCG one, right? Right from an HUL, ITC ahead of its numbers, Imami which was up 5%. Anything that you would want to call a strength in the charts of?
So 3 charts which are looking attractive. Britannia, I think, has come back towards a fresh high. So that's an attractive name to look at, especially in terms of trading, because we're looking at a potential 5% to 7% swing, which could be decent for these FMCG names, which traditionally move into high periods of consolidation and less periods of trends. Even HUL, for example, that stock has been starting to look very attractive. So it's completed a classic pennant formation on the daily charts, rising up above the 50-day moving average, which was actually a resistance for the stock for the last 2-3 months of the price correction. And I think in that time span, it corrected by more than 350-400 points from 2550 mark to almost 2100 level. So I think with this change of behavior and the change of trend for HUL, that could be an attractive proposition to look out for in a short-term play. ITC, I would still be a bit circumspect because the stock still has this odd tendency of trying to or the rally halting around the strong psychological mark. 450 still seems to be a major resistance for ITC. So bullish on the stock on the positional play, but as a medium term or short term trade, I would probably wait out for that breakout confirmation above 450 and then go long on ITC.
Okay, the other one which is in focus is also going to be Vodafone Idea. That 50% anchor lock-in opens this weekend, and that stock hasn't really gone anywhere today, just mildly soft around that 1350 odd point. And the other one that I want to pick up is Paytm. Yes, poor numbers, but the stock didn't collapse pretty much. In fact, it's now in the green, holding up 5% as we speak right now. Much of the damage is already behind it, perhaps. Andrew, I don't know if you've been tracking these two stories, both Vodafone and Paytm, and whether there is a disbelief to belief story or trade here at play.
I think for the telecom sector, we're all going to wait till. I mean, I think it's well known. We're all waiting till after the elections for the first tariff increase, and that will obviously, keep the momentum for the sector going forward. But it's not just that one tariff increases. Is there potential for more going forward? I think there probably is. But like anything, there was always an overhang in stock on Vodafone, and now you still have it. As you said, there's some of the anchor investors, may want to dispose or not. So that will keep a dampener on the stock in the short term until after the elections and the tariff increase, and of course what the government might do with their holdings as well going forward. I think on Paytm, I haven't looked at the results, to be fair, and I think there's still that regulatory overhang. So I think they're just going to wait till I see how all that plays out when the RBI kind of gives its its kind of go ahead to move forward. I'm just happy to wait for those kind of things to play out on this stock.
Rush to buy Paytm as yet. Let's wait for the regulatory overhang to really get cleared before taking any bets. Thanks, Andrew, for joining us today. Appreciate your time.
If you like this video, then like, share and subscribe to ET Now.